Nvidia shares are up nearly 5% today and more than 9% despite last week's sell-off. While the volatility left some investors wary of the big AI names, our next guest saw the dip as a buying opportunity, upping his stake big time. Let's bring in fast money trader and Grasso Global CEO Steve Grasso. Give me the deets, Steve. It's good to see you.
How you doing, Kelly? Yeah, this could have. I always love hindsight when it proves you're right. This was a binary instance, though. This could have went very bad against me if the macro market sold off. It didn't, so I look great, on a micro basis after the fact. I own Nvidia. I originally owned Nvidia, I should say, in the 120s was my average, and I expanded that position considerably. So now my average is around 102. So that's how much I was buying on that dip. Once again, that dip could have gained more strength. Market could have sold off more precipitously. It didn't. So once I started to see the market solidify, I really leaned into that position for Nvidia.
What's the exit strategy?
Yeah, so normally, when those of the people that follow me on Twitter or watching on Fast Money, I usually trade around a core position, which means that I'll have my core positions and then I'll trade tails around it. The tail actually became the core. So I think that the stock probably trades back up to the 120 range, and shorter term, obviously 115. That was just a blink of an eye of where it was today. So I think you're going to see higher prices. I think the market has to perform well. Market doesn't perform well, this is definitely a momentum stock, but I think you're going to see a 120 print sooner rather than later in the name.
Last week, the stock market witnessed an unexpected twist that had enthusiasts, analysts, and investors buzzing. No, it wasn't another meme stock rally or Elon Musk's unpredictable tweets. This time, the spotlight turned towards an often overlooked tech giant, Dell Technologies Inc. Most notably, famed financial commentator Jim Cramer declared that Dell might have hit rock bottom, making it a prime buying opportunity. Alongside Cramer, Barclays analyst Tim Long also upgraded Dell, pushing it into the spotlight. This series of endorsements has left many wondering, is this really Dell's time to shine? In an era where stories about skyrocketing AI stocks and revolutionary startups dominate the news, it's refreshing and somewhat perplexing to see Dell Technologies making waves. Let's dive into the details behind this newfound enthusiasm and dissect why you should be paying attention to Dell's stock, particularly in light of their strategic alliances with companies like Nvidia and endorsements from heavyweights like Cramer. But first, if you want to keep up with the latest updates of companies like Nvidia and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Because I wonder, not that the bloom is coming off the rose, but that there's a sense when you see Apple Intelligence coming out without being trained on Nvidia chip, I'm going to be some of these other rollouts that don't necessarily require those big, expensive workhorses. Are they kind of telling people that there's a way to participate in the AI rush without it necessarily being that Nvidia share price doubles and it becomes a $6 trillion company or whatever? Have we kind of dialed that back a little bit, I wonder?
Yeah, I think that's a valid premise. But when you think about it, they still own 85% of the market share in AI. So maybe to the extent of the chip that's going to be used could change depending on what sector of the economy that you're in. But ultimately, if you want premium, you're going to go with Nvidia. Everyone that we heard from in large cap tech is increasing their spend in chips. Do they all need the highest price chip? Maybe not, but they're all going to be buying some aspect of Nvidia, and nothing grows to the sky, Kelly, to your point. But I think we saw that drawdown pretty effectively last week, and I think people are getting back into it, understanding that the fundamentals are still sound.
Despite an initial slumping performance, Dell Technologies is gathering a lot of attention for intriguing reasons. Barclays analyst Tim Long recently upgraded Dell from underweight to equal weight, setting a price target of $97. This might seem like industry jargon to the uninitiated, but in the allegorical world of Wall Street, this is essentially a glowing recommendation. Tim Long's upgrade was based on a decrease in the AI hype, which has minimized downside risks, a clear indicator that the market sentiment is shifting. Even Jim Cramer, who has been eagerly waiting for this announcement, took to CNBC's Squawk on the Street to vehemently support Barclays' recommendation. Known for his fiery takes and astute market predictions, Cramer's faith in Dell's future prospects is nothing short of significant. According to Cramer, purchasing Dell stock after significant sell-offs has historically yielded positive outcomes. His faith in the stock is buttressed by several compelling arguments. First, low price-to-earnings ratio. Cramer pointed out that Dell's PE ratio is around 12, which is relatively low. To put it into context, this is like finding a vintage item at a thrift store, a gem, undervalued by the broader market. Secondly, strategic AI positioning. Cramer emphasized that Dell's strength isn't just in selling hardware, but in providing integrated services solutions. This places Dell in a unique position to capitalize on AI transitions without falling prey to pricing pressures affecting other AI players. Thirdly, notable endorsements and relationships. Dell CEO Michael Dell received a special mention from Nvidia CEO Jensen Huang during the GTC 2024 event. But that's not all of it, so let's keep rolling. Hello everyone and welcome back to Investocracy.
After everything that's just happened, it feels a little back to the future to me that we don't come out of this, repositioning or whatever it is and say, okay, time to rotate into the smaller caps and the mid caps and the value, this and whatever. It's kind of, okay, no, yields are lower. The NASDAQ's outperforming the Russell today. Nvidia's taking off. And what does that tell you? Or is it a head fake?
Well, it tells me if you look at the chart on the IWM, if you look at the chart on the small caps, those names, 45% or so of small caps are unprofitable companies. Back in the 90s, that number was 15%. So people want to travel where they have the fortified balance sheet, where they have earnings, where earnings are growing. And that is still large cap tech and technology as a whole. So, yes, I think we are back to the future. And no matter which sector you are investing in, it will evolve with chips, and that takes technology to do it.
When Nvidia, a behemoth in the AI sector, singles out your company as a go-to partner, it's more than just a pat on the back. It's a strategic endorsement. Dell shares have experienced a 25% drop in the past month, which might deter some. But here's where history becomes educational. Dell's price action has often followed a cyclical pattern, where steep declines are succeeded by robust recoveries. For evidence, one needn't look further than their recent performance. Despite the dip, Dell shares are up about 31% year-to-date, and were trading at $141 at the time of writing, according to figures from Benzinga Pro. This turnaround story gains more weight when you consider the stakes involved in the AI sector. Nvidia, with its almost $3 trillion market cap, stands as a titan in this industry. While Dell might not possess the same stature, its strategic partnerships place it in an enviable position. Dell and Nvidia are both scheduled to report their second quarter financial results at the end of August. Dell's projected earnings of $1.68 per share and revenue of $24.139 billion seem promising when stacked against Nvidia's expected earnings of 64 cents per share and a higher revenue forecast of $28.464 billion. Cramer's and Barclays' bullish perspectives on Dell are grounded in more than just optimistic thinking. Several data points support these sentiments. First, revenue streams. Dell's diversified revenue streams play a significant role. While the company has been traditionally known for its hardware, it has significantly expanded in services and solutions related to AI and cloud computing. Second, AI integration. Dell's positioning in AI and integrated services provides a buffer against wild pricing fluctuations seen in other sectors. AI isn't a buzzword for Dell. It's part of a broader strategy to provide end-to-end solutions for enterprises. Third, market dynamics. As the hype around AI technologies cools, companies with solid fundamentals and realistic expectations like Dell stand to benefit. The correction phase within the market reflects a maturity that rewards real value over speculative exuberance. Should you invest in Dell? The answer is crystal clear. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Olivier, we all know that Nvidia is the bellwether, and they report later on this August. How important is this going to be in terms of an event for Mag 7, the leadership and the concentration in the market, and CapEx, specifically with Nvidia? If they are maintaining capital spending or even raising it, then that's going to be a big confidence booster. Do you believe that is what is going to happen? Is that the right way to frame it?
I think that's the right way to frame it. I think they're, the market share that they have and the demand pipeline that they're looking at should be enough. I don't think there's going to be any major issue there. Again, the one thing that I do keep looking at, and it's not a big deal, but it's something to be prepared for, just in case some of those numbers look a little bit weird, is TSMC and other fabricators may be boosting, just bringing in a price increase that we may start to see in August, or at least in the fall. And so that's going to impact Nvidia, it's going to impact AMD, it's going to impact Apple, ARM, Qualcomm, MediaTek, all the major chip stocks that you guys talk about that are really relevant to this AI disruption. So that's my one caveat, that we may have to lower expectations just a little bit based on that eventuality, but that's it. Everything else is solid. Nvidia's solid, AMD's gaining, Qualcomm and MediaTek are doing fantastic in the device space. And obviously, we're seeing some really interesting launches with the AI PCs and Copilot Plus, with Microsoft getting behind this, Intel entering the market later this year, shipping next year, AMD entering the market in force now, Qualcomm already having a really good quarter with early sales of Copilot Plus PCs. And I think we'll even see the mobile space go up in the low double digits growth year over year, thanks to on-device AI. So to me, yes, Nvidia is a bellwether, but I don't expect any negative news from Nvidia at the end of the month.
Given the current market conditions and analyst endorsements, Dell Technologies appears to be a compelling buy. Its PE ratio, strategic partnerships, and diversified revenue streams make it an attractive proposition. However, potential investors should remain cautious and perform their own due diligence. Dell currently trades at approximately $141, up 31% year-to-date despite a recent downturn. Its past performance hints at potential gains, and a forecast $1.68 per share earnings for Q2 suggests imminent growth. As the sector evolves, strategic lessons from market veterans further bolster its standing. So, what do you think? Given the expert endorsements of industry titans like Jim Cramer and strategic insights from Barclays, does Dell Technologies Inc. seem like a lucrative investment opportunity to you? Is it worth diving into this tech giant amid its promising alliances and robust market positioning? Share your thoughts and engage in the conversation. While the professional take on Dell is cautiously optimistic, the conversation remains as dynamic as the markets themselves. Keep your eyes peeled. The narrative around Dell is far from over. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.